Hey traders, welcome to the first webinar of 2021. And as you might have seen, I'm starting the year with a pretty bearish stance as to where markets are heading. And I'm going to use this webinar to really break down my thesis, my understanding of where we're lying and the possible roadmap ahead, or two possible roadmaps that I'm seeing at the moment, both with very interesting consequences. So starting with the DXY on the longer term, as most of you know who are familiar with my work, you know that I am looking for an eventual turn in the dollar to the upside with a big, strong push in dollar strength up towards at least over 100, probably up higher than 108, with a continuation of this trend to the upside. So what we're looking at the moment is price pretty much in that area where we could start to see that turn. So we're very much in that danger zone for a return to a dollar-dominated world, which has very, very big implications for the rest of the world. So going into the lower time frames, we find ourselves at a very interesting level with the dollar, with some very interesting price action. So what we were looking at in this little area here was a fairly clean and clear corrective structure from kind of early December. It looked a lot like we were going to pop up from there and we were going to see a nice clean corrective structure for continuation to the downside. But what we got instead heading into the end of the year and to start 2021 was a continuation to the downside, which kind of makes the structure quite extended in the end of the B wave, or what we call the C of B wave, which gives me cause for concern that what we're seeing is potentially a contracting flat that was already completed, and this was actually the continuation to the downside and the final move in the dollar. And what we've seen now is a break out of this descending wedge and a continuation to the upside, which may be the start of our big dollar move. So kind of middle ground 50-50, and only price action will really clarify what we're seeing here is either a C wave, which means we're going to see further dollar weakness heading into Q1, the rest of Q1 basically, or whether we've already seen the turn and we're heading to the upside. If we look at previous corrections, you can see the size of some of the major corrections on this leg are pretty much in line with this being a contracting flat, and we are now seeing a continuation. If we're going to look at this as one big contract or one big running flat, you can see how big that correction is in comparison to the other correction, which doesn't really fit. And that is exactly why I'm kind of starting to ring those alarm bells that we're seeing that turn to the upside in the dollar, and we really need to keep a close eye on what's to come. As you can see, if we zoom right in, we've seen a very strong bounce kind of from 6th of Jan, forcing its way upwards, and now we're starting to see some price action that is going to be significant. Basically, the next kind of 1 month or so will give us clean clarity as to where we headed from here. Taking it to the euro, pretty similar situation. We were looking for all of this to develop into one big running flat with the expectation of a big drop, kind of like this, what we're seeing here. We were expecting this even further or even sooner. And we just saw that continuation to the upside, which kind of made this running flat very extended and kind of decreases the possibility that we see that move and increases the possibility that what we actually saw was a contracting flat and continuation to the upside from there. And if we zoom out to the weekly, we see the same thing, and we're very much in line with the minimum target levels, or MIDI, what we call the MIDI target levels of the euro, and in an area where we could start to see that turn to the downside, down towards parity on the euro. So that's how big that US dollar move is going to be moving forward. So we are very close to those levels. The one saving grace we have is the pound, where the pound obviously has done enough in terms of levels to turn to the downside. We could very easily see this continue to the downside after a nice big ABC corrective structure. But when we go into the lower time frames, especially say the 8-hour, you can see this is a corrective structure that is still very much in line for a dip down towards 128, and then a continuation to the upside before we see that turn. So this is kind of the saving grace for the dollar, and gives us a little bit of hope that we may still see a little bit of dollar weakness before we see that turn to the downside. So this is kind of the counter argument, and one of the things laying the probability for further dollar weakness following just a short-term drop before we see that big move. So we'll be keeping a close eye on this as well as the euro to see where we can find some consolidation between the two, where they both start to agree that what we're seeing is actually a running flat on the euro, a big running flat, kind of extended running flat, and we are really going to get this move to the downside and then continuation before we see the big move. So we'll be keeping a close eye on the euro and the pound. New Zealand dollar is another one that's pretty much a worry or cause for concern. I'm going to New Zealand dollar first, in particular, because we're more likely or more interested in what the Aussie US dollar would be doing, but the New Zealand dollar has much cleaner price action, and you'll see, I'll go to the Aussie dollar next. This is just going to give you a cleaner picture as to what the Aussie dollar is doing. So we have this big impulse to the downside, and we go into what looks very much like a very clean corrective structure. Impulse up, nice and choppy A wave, nice choppy B wave, nice clean corrective structure in the middle, and a nice impulsive C wave. All the things we would be looking for in a nice clean corrective structure, which would precede a big move to the downside. Whether we've seen the top of this is possibly not quite there. Maybe we see a little bit more upside and we go and break, say, 76 before we turn up or turn down. We can see that the levels are pretty much in line, where we could still see some more upside to break these highs before we see that turn. Very possible. But at the same time, we may have seen those highs already. So we'll have to keep a close eye on the lower time frames to look for a little bit of a topping pattern, look for a bit of a turn in the markets. And really what we're seeing on the lowest of time frames is quite a clean and clear head and shoulders pattern. As you can see here, nice impulse up, pull back, push up, pull back, push up, pull back. Very clean head and shoulders pattern, which may be signifying a turn to the upside. So we'll be keeping a close eye on that. Obviously, what we could be seeing is a running flat for continuation to the upside, which is also a possibility, and in which case we're not too worried then, because that just means, like we said, we're going to see continuation and probably push up towards the 76 zone before we see that turn. So again, like I said, all we're doing at the moment is laying probabilities down, evidence for continuation of dollar weakness or evidence for a turn in the narrative back towards a dollar strength environment. Going back to Aussie dollar, US dollar, you can start to see how it's a much messier structure, very unusual structure, but it still lines up. Choppy A wave, fairly decent B wave to the downside with a decent corrective structure in the middle, and then a strong impulse off those lows. And again, we'd just be looking for a potential turning point. And again, getting a little bit of a contract or a little bit of a head and shoulders there, but also potentially a running flat. So we'll be keeping a close eye on the price action that develops in this region. Very similar to the New Zealand dollar, US dollar. US dollar CAD, zoomed out to the weekly, you can see again, very clean and clear structure. Choppy A wave, choppy B wave, nice impulsive C wave, and we are potentially going to see a turn to the upside either from this region, or we're going to see continuation down towards the lows and then see that impulse from those lows. So keeping a close eye on that. Nice impulse up, choppy corrective wave, impulse up, very clean price action. Going to the lower time frames, again, it's a matter of what are we seeing at these low time frames. We had a very strong push off these lows from 126 up to 128, which potentially was the start of a big move. But now we've started to see that fade down towards the lows. And if this continues down towards the lows, then it's going to be a very clean and clear sign that what we actually saw here was a corrective structure. Potentially we would have to move this and look at all of that as a bit of a running flat. Potentially we have a double bottom, or we just see continuation, especially with it running flat, there's a good chance for continuation. So this is another one that's kind of in the line for a little bit more dollar weakness, but very strange price action in conclusion, or if you lay it on the table in comparison to, say, the euro or the pound. So like I said, there's a lot of uncertainty at the moment, so we're just laying probabilities down. Silver, I had a relook at this silver chart, and I'm going to zoom all the way out to the monthly to give you a better understanding of what we're looking at. As you can see, what we're looking at is a structure that says big impulse off the lows all the way back from basically the roaring 20s. We're starting to see a big corrective structure here. And these big corrective structures are very much reliable on the higher time frames. What that means to me, what that says to me is what we're looking for next, or what we probably saw the beginning of already, is a big move to the downside, the start of a big move to the downside. And what that means is what we saw in this big rally, what we thought was a big move in silver to the upside, was actually just the end of a big corrective structure on, say, the daily time frame. Nice big expanding flat, and what we can see now, or potentially what we're going to see now, is a big push to the downside. So my students will know that this is a very clean structure, and the expectation is highly weighed towards a continuation to the downside. We'll go to, say, the weekly. You can see how this is a nice big drawn out corrective structure, and some more downside is possible. Obviously, we may be correcting for, say, a little bit more upside, but probability weighs for potentially a double top or a little bit more continuation before we see a bigger drop. So we are leaning more towards bigger downside on silver than upside. Now it's all about seeing, are we on a topping pattern? Have we seen a high on this? And there's really nothing conclusive at the moment, but potentially this was your first move down, and now this is all corrective. And if we start to see this fade to the downside, we can really start to look at silver prices that are probably going to head below 10 and even lower than that. And that's, again, going to be driven by a very strong dollar environment. Gold, this is silver miners, just to show you how the structure is very much in line with what we're seeing in silver itself, very much in line with an ABC corrective structure for continuation to the downside. Potential again for a little bit more upside, which we potentially started to see, but once these highs are broken, you're really expecting a turn to the downside. Very clean and clear. Gold, again, back out to, say, the monthly chart, and what you'll see is a very clean, clear impulse, correction, impulse, and what we've seen here again is part of a corrective structure. Impulse down, choppy move up, and what's to come, what's to be expected is a move and a push down, probably towards kind of 1,150, that kind of region. So we're expecting a big drop in gold. Most people not expecting that. Most people think gold is slowing its way up given the current environment, but the charts are saying otherwise. Charts are saying A, B, C correction down towards these lows in gold. Now it's a matter of, have we seen the highs in gold? Have we turned already? And again, similar to silver, only time will tell. But it's possible what we've seen is the first impulse down, gone into a little bit of a running corrective expanding triangle, and we could potentially be seeing the first move down. And if that's the case, that's an indication to me that we've already seen the highs in gold, we've already seen the lows in the dollar, and we're really starting to move to the downside. So we'll be keeping a close eye on this, looking for those gold shorts, because gold is one of those that's going to give us a nice fall. And as you can see, big impulse down, starting to see a corrective structure here, which indicates more downside to come. So a very close eye on that. Copper, zoomed out to the weekly. As you know, we were pushing for a nice long in copper up to break these highs. We've broken those highs in pretty much a straight line. And when we turn to the downside, what's to be expected is a move back down to these lows, potentially close to these lows, 120, 140 in that region. and that again going to be driven by dollar weakness. Platinum, similar scenario. I was looking initially at platinum to rally up towards at least 1300, 1350 in that section. But if we re-look at the structure and look at this as just a corrective structure more than a push to the upside matching this one, you can see how there is room for this to drop pretty much from these levels. So we'll be keeping a close eye on on platinum. If we start to see a turn in platinum, very likely we're going to see a continuation or a turn in the narrative and a move towards dollar strength. What I saw was a big strong move off the highs, which was an indication of dollar strength, but we've recovered quite nicely from that, which means potentially what we're seeing is just another leg up before we see the turn. So just buying us some time. And if this continues to rally, then we're all good. It just means that narrative is just going to continue for a few months more, and we're going to see platinum head towards at least the minimums at 1300 or potentially as high as 1700. So again, we're keeping a close eye on the surrounding markets, and this is just the bellwether. This is one of those that is a bellwether for where we're going to be headed moving forward, and whether we're looking at this as the central structure, or we are actually going to see that original analysis play out with platinum heading higher from here, which means that narrative of basically dollar weakness will continue for a few more months more. Aussie dollar yen, another interesting one. If we zoom out to the weekly, you can see how the structure is lining up for all of this to be part of an impulse down, corrective structure, impulse down, which means we're starting to look for a turning point to the downside. We've had a very strong rally since stimulus began, but the structure says we are looking at an ABC correction, all part of a central B wave structure, and that means Aussie weakness risk off environment to come moving forward. It's just a matter of timing and whether we've seen the top or not. If we zoom in, we get a clearer understanding of where we're lying. We'll zoom out to say the 8 hour. You can see again those structures playing out in the lower time frames, impulse up, ABC correction, and we are approaching that minimum level. I'm kind of leaning towards this one to kind of fade or give a little bit more upside and probably head up towards this kind of 89 area. So as you know, I'm not a big fan of the support and resistance lines. I think people use them far too much, and I don't rely on them. But if we zoom out, we can see one that's quite significant. Lots of touch points, and that's what's important to me on a support resistance line, is a higher time frame and lots of touch points, which indicates to me this is a very important level. And then what's more important is some confirmation of that line. And when we look at the potential upside of this structure, this lower degree structure, you can see how it correlates with a 90 handle before we see that turn to the downside. So I'm leaning on that as a potential turning point for this, which means a little bit more risk off, which means it kind of lays towards a little bit more dollar weakness, more risk on before we see that turn. So this is buying us some time. But at the same time, if we look for confirmation, this only has to get up to kind of 83 before we see a turn. So another one we will be keeping a close eye on as to whether this is just a temporary correction move in the dollar with continuation to the upside to come, or we're seeing a turn. New Zealand dollar, same thing. I just put New Zealand dollar on here because it's a much cleaner structure and very clear corrective price action for continuation to the downside. But again, we just might see this pop up towards these highs. As you can see, lots of touch points, and this 83 region becomes an important one, making this an expanding flat. And from there, we'll see continuation to the downside. And as you can see, consolidation or confirmation of that in the lower structure. S&P, as you know, 4,000 on the S&P has always been a big level for me, and we are very much approaching that region right now. If we zoom in, you can see how there's still a little bit of room to run on this. Nice could be a corrective structure, and you can see how the structure on the lower degree confirms this kind of 40 or this 4,000 or 4,050 region as a very interesting region for us. So we're keeping a close eye on that. And it's another one that says we may be a little bit early on our dollar weakness call, but it is coming, and we might just see a little bit of a rally in US markets before we see that turn. And government bond yields. This is why I am so cautious, because we're starting to see these yields rise, and this may be a driving factor when it comes to interest in the dollar and a rally in the dollar. Another one we're looking at is EEM, zoomed all the way out. You can see how we have a nice big impulse and we go into this nice long corrective structure. Previously, I was looking at this as a contracting flat, and we're looking for just a continuation to the upside. And I think I made an error in that. And what I'm actually seeing is an impulse up, an A, B, C, D, E, expanding triangle in the middle. Now we are part of this leg up to the upside. We're going to go and break these highs. And once these highs are broken, I think we're going to see another big fall similar to 08, 09. And that, again, is going to be driven by dollar strength. We're going to see a lot of moves from EEM into the dollar as a safe haven, and this is going to see a huge drop in EEM over kind of the next probably year to 2 years. So like I said, I'm heading towards a more bearish stance. And then we move into kind of the EM, emerging market currencies, starting with South African Rand. South African Rand bouncing off of a very interesting level. With my corporate clients, I've been earmarking this 1455 level as a huge level, and we've seen a very strong bounce off that level. And it's all about seeing whether this bounce is just a corrective move, and we're going to see a little bit of a corrective structure in here before continuation down towards our full target at 1355, which means our big move in the dollar isn't quite here yet, and we've got a couple of months to go. Or what we're looking at is a big strong move off the lows, which is the start of a big move in the dollar, taking the ZAR up towards 2024. So we'll be keeping a close eye on that. Moving on to the other emerging markets currencies, when we say the Singapore dollar weekly chart, a very big indication of what's to come. As you can see, impulse down, choppy move up, impulse down, and what's to follow will be a big strong move. It's all about, have we seen that move starting, or are we just seeing a temporary corrective structure? Again, big move off the lows, and what we see next will be very indicative of whether this is just corrective for a little bit more downside to probably break these lows at 130, or it is just the beginning of the big move up. So close eye on that price action. Again, Mexican peso zoomed out to the weekly, you can see very much in line with that line of thinking, where we are very much at the full target already on the Mexican peso, and we will be expecting a strong jump off of there. You may see this develop into a trend line, maybe dip a little bit lower and then take off from there, but we are very close on these EM currencies, and we are very much looking for a bottoming out. Again, what we saw, big strong push off these lows, which was potentially the start of the move, but we've seen a bit of a fade from there and it's starting to look a little bit more corrective, which is a good sign for a little bit more weakness before the turn. And Brazilian Real, another one that's looking a little bit touch and go for continuation to the upside. Another one we're keeping a close eye on. And Turkish Lira, same thing. It's pulled back towards its minimum levels. We may see a little bit more downside, but it's at a level where we may see a turn. So keeping a close eye on that. And it's another one that we saw a fairly strong rally off the lows. So we'll keep a close eye on this to see if it becomes correction for more upside or corrective for more downside. And finally, Bitcoin. I know a lot of Bitcoiners are going to hate me for what I'm about to say, but there's a very good chance we see Bitcoin pull back towards kind of 10 to 15,000 in this move. The structure is very clean and clear, and what we are looking for is a turnaround. So it's all about whether we've seen that turnaround already at these highs, and this big dump from the highs has actually been the start of that move. We'll be keeping a very close eye on this price action, what's to develop here, what is developing. I'm more inclined to think this is an impulse, correction impulse, and we're more than likely going to fade to the downside from here. But I could be wrong. We may just continue to chop around here, go back up to the highs, in which case this is all just correction for a little bit more upside before we see that turn to the downside. We may see something like 50,000 before we see the turn. So we'll be keeping a close eye on this price action, seeing how it develops, whether we may have seen the turn already, or we're just going to be kind of correcting in this zone, something along these lines for kind of the next probably month, couple of weeks to a month before we see a little bit more upside, or whether we've seen this to the downside. The next kind of probably the next week will be very indicative of where we headed next. And Ethereum, another indicator on the higher time frames that we are ready for a deeper pullback, just a matter of whether we are seeing that pullback now or we are just correcting and we're going to go break the highs before we see that turn to the downside. Again, keeping a close eye on this little structure here. So that's, and finally, commodity index. Again, we were looking at this one and we have been watching it for a long time to push up towards kind of 189 to 200 before we see a turn. But I think given the way the markets are playing out and given the nature of the turn that I'm expecting, I expect it to be a kind of a slow turn, like a big ship taking its time to turn rather than a big crash, which means we could just see a continuation of commodity index rising before we see it turn to the downside, while some of the other things like emerging market currencies may have turned already. EEM may be a last kind of commodity index to turn before we see a change in narrative. So again, another one we'll be keeping a close eye on. I also spent a lot of time going through US equities, which is also showing a very interesting picture. I'll be going over that in a different separate video, which I'll be recording live for students this afternoon, and you'll have access to that video as well later on. So yeah, basically in summary, we are not battening down the hatches just yet, but we are putting out a little bit of a storm warning. Be prepared for some danger ahead, and we'll be keeping a very close eye on the current price action as to whether that hurricane is starting to build or we are still in warning mode and just can maybe squeeze a little bit more lemon out of this juice of the dollar weakness before we see that turn. And that I expect will occur basically before Q2 more than likely, or in Q2 more than likely. It's cool, guys. That's it. That's the breakdown. Hope to be in touch soon. Otherwise, catch me on Twitter for further updates. Keep well and hope you have a great year ahead.